We're going to continue our exploration of what must be included in income from employment in accordance with the Income Tax Act. We already saw the very broad brushstrokes under the value of benefits by virtue of, in the course of, or in respect of employment. But we also saw that there was some exception. So the Income Tax Act lists some items that are not included in income from employment, even though they certainly meet the broad definition of benefits that we just heard. In addition to the ones that are listed in the Income Tax Act, we will explore what are called administrative exceptions to the benefit rules. These are benefits that, for one reason or the other, Revenue Canada, CRA, is choosing to not tax. They could. These benefits meet the definition of a benefit, as we saw in 6.1a. However, they're not at this point being taxed. That could, of course, change at any time. To start with, though, let's take a look at what the Income Tax Act says are exceptions. There's a number of them here, but we're going to focus on some common ones, and we're going to see that the first one is any benefit derived from the contribution of the taxpayer's employer to a deferred profit sharing plan. Deferred profit sharing plans are plans that the employer sets up in which a portion of the profits are set aside for employees. This is beneficial to the employee, and one might think that it should be included in income, but this part of the Income Tax Act says that this benefit is not included in employment income. We see another very common one is group sickness and accident insurance plans. So where an employer pays for a group sickness or accident insurance plan, which protects the employee, and so is a benefit to the employee, that this exception is right here in the Income Tax Act and does not get included in income from employment. Another common one is a registered pension plan. So here we have a contribution of the taxpayer's employer to a registered pension plan, and this part of the Income Tax Act says that this is a benefit that does not have to be included, and in fact is not included in employment income. The other one that we're going to come across frequently in our course is a benefit derived from counseling services in respect of the mental or physical health of the taxpayer or an individual related to the taxpayer, or a benefit that was derived from derived from the counseling services in respect of the reemployment or retirement of the taxpayer. So the key word isn't counseling services, but rather what the counseling services were for. So where the employer pays or provides counseling services as regards mental or physical health for the taxpayer. This one's broader because it also includes individuals related to the taxpayer. That can be excluded, so that's a non-taxable benefit. Or if the employer provides counseling service in respect to the reemployment or retirement of the taxpayer, that as well is exempt under this section. Those are the ones we're going to be focusing on. You'll see them come up again and again. Before we leave the exceptions, I just want to point out a couple of things that's always interesting. You'll see that in the exceptions it talks about a group term life insurance policy. I didn't mention that simply because further on in the Income Tax Act, we'll see that group term life insurance policies are specifically included. Another thing to note here is that the registered pension plan and the deferred profit sharing plan, both of these are taxed when the employee receives them. So the textbook refers to them as deferred benefits. So the tax is deferred, as opposed to something like the mental and physical health counseling, which is a tax-exempt benefit.